Hello, everyone. Welcome to We Fixed Real Estate. I'm Drew Hendricks, and we have Fred Glick. Fred, how's it going?
Oh, just groovy as usual, Drew.
And René Pérez, the pricing savant. How are you doing today, René? Got some good
Oh,
loft in your hair.
Yeah, well, you know what? I think I'm not going bald, so it's a great Friday for me.
I'm gonna land some planes on your head. It's so flat up there. I mean,
Yeah.
yeah, it's cool.
So let's see. It's been a week or two since we've been here. René, you've been out selling houses and showing homes. How's things been going?
Yeah, I mean it's a struggle, right? Because it's the constant act of every market's going to be different. There's houses that have 20, 30 offers that are marketed really well, that are marketed to where they should go in terms of sell price. But you have 50 buyers that have been on the market for 3, 5 years now, right? Or that have, the cash funds to close quicker than everyone else. And it affects, the ability of that first time home buyer. So you look at the San Jose market, there's a little bit of pockets of multiple homes that stay a little bit longer. Cupertino, Saratoga, Portola Valley, things just stay on the market for a week. We even have properties in the $8 million range, going off market, in San Francisco. So I think one of the stories that I saw the other day and I meant to post about it was about how Macy's is shutting down, the Macy's in San Francisco. I think that's one of the big headlines, for San Francisco this week. Yeah. And
Big
it's like,
deal.
well, exactly. Well, that's my whole point.
Yeah.
Big deal, because you still have, residential owners or buyers buying $8 million properties in San Francisco. So people are not leaving just because the headline says Macy's is leaving and shutting down.
More tourists go to Macy's on Union Square than people
Yeah.
who live in San Francisco. That's
Yeah.
what it's there for. So
And that's
expensive real estate.
progression. I mean, that just show the progression of, like, even before the pandemic, right? All these retail stores were already, being hurt by online and e-commerce, right? So it's nothing new, right? But when you read the headline, oh, San Francisco is a, bad area to live in. There's a lot of encampments and homeless and blah, blah, blah. People are still here. People are not leaving. So
I think it's going through a reinvention. I mean, we've seen it for a long time. People are shopping online, and there's less and less of a need of these vanity stores. And the whole thing about that whole Union Square is everyone needed a flagship store there, but it's all vanity.
yeah.
So I see it more of as a reinvention of that area.
Mhm.
How do you see it reinventing itself?
I think it would make an amazing co-working space, right? With a lot of, with 20, 30 AI startups just working together in that mall, that's how I would see it. So
It's an interesting proposition because it's right on the median.
Could be a combo thing. You could put, the top floor could be an amazing $30 million penthouse for somebody. The conversion from office to homes for people is happening, and each building is going to be a little different, but that's a solid old high ceilings. I mean, it could be really amazing. Or put a restaurant on the first floor and condos, but who knows?
I love that idea. Just to
Somebody will figure it out.
make it more dynamic, other than just office space where you've got cubicles. And I think Renee's got like a co-working space of
Yeah.
the next generation.
Yep,
Yeah.
totally.
And you also, I mean, a lot of conferences have left. I mean, it is true to believe that they left San Francisco to host, like, in Vegas, for example, right? Like Google Next, which is one of the biggest conferences in San Francisco. They had it here last year, and this year it's happening in Vegas. Well, now you pitch to Google, hey, you have this huge open space to host your company conference, host it here.
Mhm.
So it's a lot of things that can happen.
A little of that though has to be like most of the people at Google actually work like right down the street. It's more interesting to go to Vegas.
Yeah.
There's
Yep.
a little bit of there's a
That-
couple other factors going on there.
But the Google developers who aren't working for the company and get that, 1 week a year place to go, San Fran's a nice place. Still really good restaurants there.
Oh,
I
for
mean,
sure. For
Still
sure.
the beautiful views and et cetera, et cetera. So
Well, let's talk about listings. You guys have gotten a few over the past couple of weeks. You guys have been really turning up the heat with this. Let's talk about listings and what happens once an offer goes to a listing agent.
yeah, interesting. So you probably, if you bought a house and you've used a buyer broker who also wasn't the listing agent, what happened is you probably signed a contract and you did it on DocuSign, and then somehow or another through email or some system, it went to the listing agent. And let's take an example of something recently, like in Cupertino, where it's Cuckoo for Cocoa Puffs. They had 28 offers on a property and somebody ended up winning. Problem is, there's zero disclosures from the listing agent as to what happened. They don't have to say a thing. So they could have gotten all 28 of the contracts, looked through them, decided, and I'm not saying they did, I just want to say this is possible. They decided they didn't like the names on some of the contracts. So they put those aside, and then they took the contracts and they see one from a friend of theirs. And remember, this is usually where it's 2.5% to 3% of the sale price on $2 or $3 million, which is insane. So nothing's changed basically on the buyer broker fees. And so maybe they contact their friend and say, look, give me another contract with $5,000 more and I can get another contract for you. Because they know that everybody still wants to make the 2.5% to 3% as the buyer broker fees. So there's zero accountability and there's no laws. There's no rules. They can do anything. They can, and I know Rene's going to say on the other side, and I want him to, what the agent does and what they legally do and what they should be doing representing a seller, but it's just plain unfair sometimes. We just don't know it. So, Rene, go ahead.
I mean, so Fred was kind of sticking to the unethical portion of our real estate offer submissions. But just in general, right? Like, let's say you're looking at the most ethical agent that gets an offer. They have 20 offers and now they're going to contact the sellers to coordinate, how to accept and how to review the offers. If your agent uses a system like Disclosures.io, which cleans up the mess of having 20 agents send an offer to an email, it makes things easier. If you have a Disclosures.io sends your offers in a Excel sheet format so that the seller and the consumer can see what the offer terms are. If you as a buyer put in contingencies, whether it's inspections, whether it's the appraisal, whether it's a cash offer, whether it's mortgage, how much down payment, all that fun stuff. So the listing agent, the seller's agent, will give all those offer terms to the seller. Now, the seller obviously would like and needs a conversation with the seller's agent. If it's a husband and a wife, then in that case, they might find, hey, let's talk about the offers 1-2 hours after we received all the offers. And maybe wait a little bit longer to see if we get anything else as well, right? Now, if it's a trust sale, and that's the problem, right? We don't know what the context is of who are the sellers or who are receiving the offers. Maybe the sellers aren't actually the ones negotiating the sale. Maybe it's the kids that are really in the focus of which terms we should accept. And the parents are saying like, hey, kids, you guys let me know what we should accept and we'll go with your guidance, right? So there's a lot of people involved in who and how to accept the offers and how to negotiate. As a seller agent, you might think, hey, let's pick the top 3 offers and only counter the top 3 offers. On the other hand, a seller might be 85 years old and they're tired. They bought the house when it was $50K and now they're getting $2 million in profit. They're tired. They don't want anyone to back up. They don't want to aggravate anyone. So they're going to take the highest offer from the beginning. So, and I kind of summarized a lot of different, alternate paths. And that just goes to show that there's a lot of things that can happen during the process. The other thing is during the time submitting process, if a buyer has been looking for a long time, me as a buyer's agent, and it is typical and that's why it's really hard to check in about offers, because usually as a seller's agent, if your offer is one of the top offers, the seller agent will contact the buyer's agent to verify funds. they're going to call the lender to see if you're actually a great buyer. Now, those are small, subtle signs that you are in the lead to get the offer if the seller's agent calls you. So sometimes it's like, okay, if I don't get the call, well, should I call the seller's agent? Well, that can also hurt you because then the seller agent knows that, oh, we're extremely interested. Even though we don't have anything else, let's just counter them and get more money. So it's really difficult to decide, okay, should we contact the agent to figure out where we are, or should we just let it go? And sometimes the agents, depending on who they are, I mean, I work with some agents that have done 6-10 deals already. Like, and it's the truth, right? Like Fred says, like they'll say like, dude, you're in the middle of the pack. We're probably not going to counter. And that actually happened this week. There was a house in Millbrae. We submitted an offer that was listed at 1.9. We submitted 2.2.
Went 2, yeah.
And the agent tells me he's actually quite transparent, but also ethical about it. It's like, hey, like I can't share numbers or anything, but you're in the middle of the pack. And I don't know what the seller's going to do. I don't know if they're going to counter. So at that point, looking at comps, looking at the emotional factors, I knew from the start that it was a strong offer, but it wasn't going to be a winning offer. I gave a range of 1.35 to 4 million, being that 1.35 was at the minimum. The buyers, of course, they decided that they didn't want to go
2.35.
aggressive.
4.35.
2.35.
Yeah, what's $1 million between?
Yeah, $1 million here, $1 million there. Yeah.
Market.
Exactly. So at 2.35, so they went $100,000 above what the original, $150,000 above what they originally offered, and we still didn't get a response, right? So that goes to show that we were in the middle of the pack, and we submitted 200K above list, and we still didn't get it, and then so there's a silent second round that happens where there's no counters, right?
Uh-huh.
And how do you navigate that? I don't know if that term exists. If it doesn't, I just coined that term. But the bottom line is that things are really aggressive. You don't know exactly how aggressive it is. So it's a difficult, and nobody knows, can tell you how these sellers are going to respond. So
as we say all the time, it's all about the school district. That was a real good school district. And if you want to be in a real good school district in a single family house in the Bay Area, especially, on the West Side, you're going to pay through the nose. You're going to pay more than you want to pay. Mm-hmm. I mean, that's right now, that's the bottom line because, 27 people lost when 28 people bid. So those 26 others are going to bid on the next house down the street that comes out. You're still competing against them. And if you finish 7th, you got 6 other people, that beat you. So those 5 that are left in the next round are going to beat you again.
Yeah.
This leads me to
before we shift though, is it the selling agent's responsibility to present all offers to the seller, or do they wait?
Technically, they have to present the offers. He could say, "Look, I have an offer for 2,000,003. I have an offer at 2,000,001, an offer at 1,000,006," and it's like, okay, I don't need to see the 1,000,006 because it's got no chance. But again, you got to go in when you're going into these completely free of conditions. You have to be fully underwritten, pre-approved, and all that stuff, and waive and close fast. So what I wanted to lead this into is a brand new mortgage program that we have. We'll call it a swing or a bridge loan. There's a million different names for it. But the bottom line is we're going to get you a lender up front who's going, and we brokered this because we're not bankers, we're mortgage brokers, and it's available through the mortgage brokering channel. So you have to go through a broker. You can't go direct. But what they're going to do is they're going to give to the seller. We're going to give them an application and your pre-approval, and they're going to say, okay, we know you're going to refinance with Wells Fargo, Bank of America, or whomever, and after you get under contract and close, but we're going to help you close as a cash buyer. They literally go in, say, we're going to close in 10 days. We're going to make this a cash offer, and they're going to give a guarantee that if the buyer, for any reason, flakes out and doesn't close, they will buy the house. So for a seller, this is even better than a cash deal. It's amazing. 10 days, boom, done. Thank you very much. After you close, you refinance them out. They, of course, have a fee up front to do this, but it's worth it if you're able to get the house because you've gone from number 7 to now number 3, maybe. Mm-hmm. Even though your price might not be perfect, but hey, not only am I a cash buyer, but I'm a guaranteed cash buyer. Somebody's going to buy this house regardless. So we'll go into a little more detail. We'll actually probably do a separate video on this, but want to let people know. And that's good in California, Texas, Pennsylvania, that we're licensed for mortgage. And we're able to do it in Washington State with an affiliate of theirs. So it can be done in all the states that we broker in. And you can use the buyer broker fee to pay the fees, which are called points, which are a tax deduction. And it's basically a tax deduction where you're not paying for it. It's fabulous. So more to come on that, but just.
Yeah. And again, one of those things, it's like one of the flaws of this program is that it is expensive, right? So one of my jobs as the buyer agent, the buyer broker, is to talk to the agents and be like, hey, do your sellers need to move quickly? If you need to move quickly, look, well, we can submit another cash offer. If you guys want the higher price, we can give you that higher price and it'll just take longer. So what do you guys, prefer? Because sometimes it is just about the money and knowing that we're a safe bet. We want to show that even if you're not going to use the program, we recommend that you really do, because I want to use it as our form of commitment of being great buyers. Like, hey, like if something goes wrong, we do have this backup plan. We can buy cash.
Or you know what, René, we should talk about this of literally submitting 2 offers, one with the regular mortgage and one with the cash deal. But we'll talk about that later. Yeah. It just came into my mind.
I don't know if I can the other day, but I don't know if that's ethical or.
No, you can submit 2 offers because it's 2 different things you're submitting.
Yeah. No, that's an interesting thought.
I like that idea, actually. There we go. We just invented something. The twofer.
You have multiple offers. They're all from the same person.
Yeah. Exactly. You're competing against yourself. Great.
Favorite topic, Florida.
All I have to say, I was 100% right. Sorry, Florida, but you got a double whammy down there and it's starting to hit. There was a article, let me pull it up somewhere, where it basically said that the median condo price in Jacksonville and Miami dropped around 7 to 3% year over year in January, respectively. At the same time, new condo listings are surging. Jacksonville 32, Miami 27%. Because here's the problem. 2 things. Number one, getting insurance for the entire condo building is getting difficult. When their insurance runs out, people are going crazy trying to find new. I mean, I'm sure like Lloyd's of London or some ridiculous amount can cover it. But because you don't have insurance, you can't get a mortgage. So you can't even get an HO6 policy, which is the inside condo policy. Nobody wants to write it. If you're on, Boca Raton, ocean facing, well, it's hurricanes coming right at you. So it's not happening there. And that's number one. Number 2 is the condos that don't have the problem with insurance can't follow the new Fannie Mae guidelines where they have to have like less than 10% of the people can be delinquent. They have to have this report done talking about the reserves, and the reserves have to be 10% of your budget. So there's so many of these condos that had like no reserves and half management, and they were cheap, and people bought it. Oh, it's cheap and the condo fee's low. The dumbest thing you can say when buying a condo and looking at different units, oh, this has a lower condo fee. Dumbest thing you can do. Why? Because they're probably not doing anything in terms of reserve money, which means you're going to have to come up with 50 grand 5 years from now to put in. And that's the thing. They're doing these surveys on the reserves, and they're finding out they're going to need X amount of dollars from every owner. And the owners go, I don't have that kind of money. Then they try to go to the bank and borrow, and then they can't get insurance. It's a mess. So these condos, some of them are going to get literally in a year, you'll see places that are totally abandoned, entire condominiums.
So what happens if the condo doesn't meet its reserves? I mean, do the people
then people can own them, but
Mhm.
you can't get any financing. No one will put a mortgage. So only people will pay cash.
Okay.
So, and then it's still a mess. And then it's a mess, but good luck, Florida. I don't know the solution, but
that helps me understand, because last week we were talking and you were showing me a condo in Philadelphia, and I, being the naive host, I was like, "What the heck? The homeowners fees are $1,200 a month. What the heck?" And then you
the
explained to me
the condominiums are, besides the reserves, the condominiums are nonprofits. I mean, yeah, the management company could be making 15% ripping everybody off, but the elevator contract is what it is. Maintaining the hallways and how many people you have to hire to keep it clean. And that all comes from the approval of the condo board. So condos are tricky nowadays. Matter of fact, we had a property that just went under contract in Seattle where I represented the buyer. And before we put the contract in, I went to the HOA. I got every single piece of condominium information I could. I sent it to the lender. And they said, yeah, it looks good, but we still had to put in a 10-day review period for mortgage contingency to make sure that it's going to go through. If you're buying a condo or any HOA, whatever you want to call it, a townhouse development, all these names for it, if there's a monthly fee, you got to get it perfectly approved so you can get financing. Remember that, kids.
That's a good tip. So really check into the reserves, check into everything before you.
Yeah.
Because there's a lot
Do
more
your
than
homework.
the condo. It's not just that HOA fee.
Exactly. Don't just, say, hey, good looking condo. I'm fully underwritten. I'll just waive everything. And no, you can't. You cannot. We had this problem on a buyer we rep where we did waive, but we ended up getting everything. It was a little force of nature to get it through, and it was a lot of work, but we got it through. So, more or less the brand new condo, let's say Toll Brothers built, they're going to have this reserve study. So that's not going to be a problem. But some old building, it's been around.
Especially in San Francisco, Renee, I bet you're probably seeing that too in some of the being in the city there with these older.
Depends on the building.
Yeah. And I mean, the reality is that most buyers are looking to purchase a single family home. They're not looking to get a condo, right? That's where if you want to get a quote unquote deal in San Francisco, get a condo. It's not going to be aggressive. You're going to be dealing with one or two people in most cases.
Okay.
So
yeah, pretty much still like that.
Let's shift to Florida. We were talking earlier about this new 2-to-1 buy down.
Yeah. Okay. So as we're getting into Texas, our broker Haley, who was on a previous video, was talking about the fact that most buyers are looking at this 2-1 buy down. And what does that mean? Okay, let's just make up numbers. Today, mortgage rate is 7% with no points. Okay, great. You can lock that in, 30-year fix, done. But let's say you don't want to pay 7%. Well, there's a way to not pay 7%. And the way to do it is do what's called a 2-1 temporary buy down, which means you're going to buy down the rate for 2 points in year 1 point in year 2, and then year 3 through 30 is going to stay the same. So under this example, you'd have 5% year 1, 6% year 2, 7% year 3 through 30. What you're paying is 3 points, basically 3% of the loan amount to buy down 2 in the first year, 1 in the second. 2 plus 1 is 3%. So if you're using our buyer broker fee, you are allowed to take the money that it costs, the 3 points, from the buyer broker fee that we're giving you credit for anyway, and use that towards the fees to get that 2-1 buy down. That is an actual tax deduction, that 3 points. So I don't know, on $1 million loan, it's $30,000. Well, guess what? That $30,000 is tax deductible as points. So that's kind of what makes our rebate paying for that even better than if you had to pay it out of your pocket. You can also get the seller to pay it, but the seller is going to increase the price by $30,000. So because they want to net the same. They're not just saying, oh yeah, you pay us $1 million and we'll give you $30,000. Not going to happen. So it's a great program, but you can't qualify for it at the 5%. You still must qualify for this loan at the 7% interest rate. So this is just more of an accommodation for the first couple of years. And yeah, rates are going down. Some point you're going to refinance the whole thing. So it's not a bad play for certain people, especially, maybe one person, I don't know, is going to quit their job in 6 months to do something else. And there's a million reasons why you do it, but it's very popular in Texas. So with the way we charge our mortgage profit, and I won't go into details, we're always going to have better rates. And you'll be able to see these rates. You can go to arrivva.com/rates. We have live mortgage rates. You can go on, check them any day, anytime. You can actually even set it up so when rates change, you'll get an alert and know what's going on in the market. So it's a really great thing.
That's great. I can see the program's really good, especially if you're anticipating or thinking rates are going to go down over the next 2 years, but you need to buy a home now. And this is that stopgap versus just waiting.
Exactly. Yeah, because, and I think I've said this before, when rates go down 0.5 point, it allows 5 million more people nationally to be qualified. So there's going to be more buyers as rates go down. So buy now at the ugly rates, refinance later, values are going to go up. It's just simple supply demand economics. That's all it is.
That's smart.
Yeah.
Very smart. Well, any last thoughts, Fred, as we conclude this episode of We Fix Real Estate?
You were speaking about our listings, and just to keep them front of center, René's got a beautiful house in San Jose that's 6 bedroom, 5 bath. They have the license to put an ADU, a pool, a tennis court. It could be insanely ridiculous and priced somewhere in the 2.7 range. He's doing open house Sunday and Saturday, or just Sunday?
I actually won't have any open houses. So if you want to come see the property, have your buyer agent schedule an appointment.
Well, there you go. You want to give the address so people know what it is?
Now you have to hit our website. The address for the listing is 1246 Nagley in San Jose. So if you also want to find more information, 1246nagley.com.
There you go. I have 2 listings in Los Angeles. One, I'm supposed to get an offer at roughly 2:00 today. Hopefully that'll be gone. That's on Barman in Culver, the Los Angeles School District part of Culver City. And then just an absolutely gorgeous, fully rehabbed house at 2408 Boone in Venice. It's near Washington. And I've done this, and so has somebody who was looking at the place. It's a 10-minute walk to Irvine. Everybody knows who Irvine is, who's in Venice and in LA.
For those of us that aren't, what is Irvine?
It's Whole Foods at triple the price, insane quality. It's like $20 for a smoothie. It's insanity, but people are addicted to it. It's a crazy, crazy place. That Venice, CA, like Venice, California, VeniceCA.org for that house. And that'll give you, and by the way, we do this on all of our listings. You can get disclosures, inspections, make appointments, hear the podcast from an owner on every one of our pages for all of our listings. And people love that podcast stuff because, you can't really talk to the owner and he talks about all the stuff, or they talk about whoever it is. It's fabulous.
That is a very unique thing that you guys offer. Like in addition to We Fix Real Estate, you're actually talking. I was listening to it the other day. You're talking with the owner. You're going through it. Like it looked like you're actually
the MLS. Yeah, you can see us actually going in the MLS and putting everything in, and you can see how antiquated, especially the Los Angeles area MLS is. It's just 1978 architecture. They're just adding on to it. It's just awful.
Oh yeah.
Oh, and I think they're using .NET architecture.
Oh my, yes.
Because it crashed one day, and at the bottom is talking about .NET. It's like, who uses .NET? Anybody?
Yeah.
Nobody.
Sadly, it's around. It definitely needs a refresh.
Yes, it does. But that's for us to worry about, and we're doing it. So,
but you can see the behind the scenes. So, René, any last thoughts before we close this episode?
No, not really. Not really. Not today.
Just excited to sell homes and
Yeah, no, I have plenty of people to respond to stuff after this call.
Yeah,
Oh,
our
you guys
Slack
are-
is busy.
from where we're recording this, you guys are closing in about 18 minutes. So I'm gonna let you guys get on with it.
There you go.
Have a good one, everyone.